Hi, Rob B here with Rob D, and you are listening to the Property Podcast. Now, as we all know, the world's a bit upside down right now, and as an investor, it can be hard to know what to do. But what if you're considering pulling out of a deal? Is that crazy? Or if you're considering investing in a deal, is that crazy? Let's find out.
Welcome to the Property Podcast, where every Thursday investors come to be informed and inspired. This week's episode is for everyone who is currently active in the property market. So whether you're in the process of buying a property or you're just thinking about buying a property, how should you react to current events? What changes should you be making to your plans? Everything that's going on at the moment is affecting everyone's plans in pretty much every area of life. In property in particular, there are a lot of people caught up in this at different stages, wondering what they should do. Well, we can't sort out the rest of your life for you, but when it comes to property, we can have a go. And we're going to explore what your options are in three common scenarios. So scenario one is you've already exchanged on a property. Should you complete on it? Scenario two is you've agreed the purchase of a property. You might be a fair way down the track with that, but you haven't exchanged yet. And scenario three is you're earlier in the process. You had been planning to invest, you've been actively looking, you've been out doing viewings. What should you do? Should you keep on doing that, or should you put your plans on hold? So Rob, let's start furthest down the track and then work our way back. So we'll take the situation of somebody who has exchanged on a property. The completion date is coming up, but they're nervous now as a result of everything that's happened in the last month. They're worried that they're potentially overpaying for the property now because things have changed. And they're also worried about a lengthy void period after completing on the property because clearly the rental market has come to a standstill. What can someone do in that situation?
Of the three scenarios, this is going to be the easiest for us to answer because you've got the least choice. If you've exchanged, you've legally committed to purchasing this property. This isn't something you can decide on a whim whether you do or not. There's serious implications here because now you are expected to complete on the property. And in a lot of cases, if you've exchanged, you've probably put some sort of deposit down. The developer or seller may allow you to walk away from the investment and leave your deposit in. And we'll get into that in a moment. But the developer or seller also has the right to pursue you for the full sales amount if you've exchanged. This is a legally binding contract that you, as a buyer, have committed to purchasing on. So I think it's worth saying straight from the off that you must treat this seriously. This isn't just some trivial thing you can decide to pull out of and expect no consequences. There will be. And it may be that the developer or seller will pursue you for the full amount that's owed, or Rob, they may allow you to walk away from the deal and withhold the deposit. Now, deposits in typically be around 10%, but depending on what deal you've done, it may be even higher. And Rob, it's quite hard to walk away from a deal when you've put so much money in. And actually, financially, with no emotion, it's probably a bit crazy to do that.
For it to be a good idea, you'd have to be pretty negative about the future of the property market. And you might be that negative. And we'll return to this point later in the episode about your beliefs about how things are going to pan out. But for you to be foregoing 10% of the purchase price, plus all the costs that you've put into it at that point, and think it's worth walking away, plus the risk of actually being pursued for even more funds in the future, you would have to have a very grim view of what the property market is going to look like. If you have that view, then you've come to that based on some reasoning, then fine. But I think a lot of people are just panicking at the moment and just going, oh my God, everything's happening. I don't want to own this property anymore. If that's the case and there's not any reason behind it, then I'd suggest that's not a sensible thing to do. Because if you believe that things aren't going to be that bad, then there are far better options. Because if you go ahead and complete, okay, maybe the investment isn't as great as you first thought it would be, but if you're planning to hold for the long term, then you'll be making income from it and it'll all sort itself out in the end. You could make an argument for pulling out and going and trying to buy something else at a cheaper price, but that argument doesn't really work because you've nullified the benefit of that by leaving your 10% in the first one. It's not. So if you've got some conviction about what the future of property looks like and it's looking really, really not good, then fine, it's something you could consider. But I think in the majority of cases, there's a large dollop of fear in there. And it is a very risky thing to do because, like you said right back at the start, Rob, your liability isn't necessarily capped at the deposit and the costs you've put in.
And it's not just the 10% that you've committed to. You've also got solicitors' fees, potentially brokers' fees. If you've progressed with your mortgage application, then there'll may be fees there as well. So the costs are adding up now, and you may actually be at 11, 12, 13% total invested. Now, if you're worried about voids, well, think this through. It's a simple mathematical equation. You just go, okay, well, how many months of voids will it take for me to spend that 12%, say? That's probably years of voids. So again, it doesn't make sense. The only reason you should walk away from a deal if you've committed that sum of money is if you truly believe property is done, the world economy is done, and there's no coming back from this. And if you believe that, well, stop listening to this podcast for a start, because what are you doing wasting your time? Go start building your bunker. Now, I'm serious. Like, if you really believe that it's all done, it's all over, then you need to be making smarter decisions than listening to a podcast about property right now. Because in your worldview, things are pretty grim. So spend it with friends, family, and do something different. But for most people, they'll be able to assess this and go, you know what, it doesn't make sense financially to walk away. And that's not because of emotion. It's just looking at the numbers and coming to a sensible decision.
Okay, so that's scenario 1. Let's talk about scenario 2 now, which is a little bit earlier in the process. So you've gone out, you've done your viewings, you've agreed to the purchase of a property, you had an offer accepted, you've been doing the legals and going through all the fun and games of that, and you've arranged your mortgage or in the process of arranging your mortgage as well. But critically, you have not yet exchanged, so you're not legally committed to the purchase. What thinking could people have around that, Rob?
So you absolutely do have more options. You can pull out this deal if you want. You still have spent money, so you'll have your conveyancing fees, your solicitor's fees. Even if you haven't paid them yet, your solicitor will still want paying for the work they've done. Any travel costs you've spent, and of course your time. You have to value that. Now, let's say you've spent £4,000 in all at this point. Should you pull out? Well, it depends. Look at the deal you've done. If in hindsight you look back at that deal and you go, you know what? It actually wasn't much of a deal. I've paid full value. I've not really done anything that exciting. It's not a deal that's now staring me inside. Then, yeah, you know what? You could consider pulling out. If you've got yourself a killer deal and you've negotiated a discount, then you probably don't. But if you now, when you reflect on it and go, this isn't so hot, I've probably rushed into this, then you can consider pulling out. And you go, okay, can I do £4,000 better elsewhere? And you know what? In this market, it's possible, although it is a risk. Don't take this lightly. If you do pull out of a deal, you've then got to hope you've found a better deal elsewhere. So you may want to do some research, start to look around before you pull out, and then you realise you haven't actually got another option to go into. Then actually you might be worse off because you've not invested at all. So don't rush into that decision, but look at your options, look at the deal you've done, and then make an informed decision.
And if you have got yourself a good deal, so you negotiated well and you got yourself a genuine discount from what the property was worth at the point of agreeing the sale, well, then again, it comes down to what we talked about a minute ago. How much will property prices be affected by what's going on, and for how long? I.e., will you be able to go out and do a substantially better deal in the near future? I think a lot of it at this stage also comes down to goals and investing style. So nobody likes to be doing anything other than the best deal that can possibly be done. But if you are a full-time professional investor and you've got no other demands on your time other than going out and finding the best deal possible that's going to maximize your returns, that is basically your job in life, then you're probably going to be more aggressive in this environment than you would be if you're somebody who's doing this on the side. Because in that situation, the time that you've put into the deal is more of a significant factor for you. And I mentioned goals as well, because if you're investing primarily for the income, well, if you take the view that once the lettings market unfreezes, the income side will be more or less the same, and you could argue against that, but if you believe that it will, then the price that you're paying for it doesn't matter as much. Of course, again, you still don't want to be overpaying, but it's a case of having that income versus having to wait however long to find another opportunity to get that income and earn back the money that you've put into the deal so far. And the other reason I mentioned goals is time frame. If you're looking at this as something to just do and leave and forget about and see where you're at in 10 or 20 years, then your view is going to be very different from someone who's trying to really maximize where they can get to in 5 years. So there are lots of variables here. And the bad news is there's kind of nothing you can look to tell you what's the right thing to do, because it's all completely based on you and your goals and your situation and your beliefs about the future, which are unknowable. But the good news is, hey, at least you've got options, which you didn't really have in the previous scenario.
It's important to try and strip away as much emotion as you can right now around your decision-making process. I know that's easier said than done, but look at the economic fundamentals of property investment. Have they changed? Has anything dramatically changed? No, not really. The balance of supply and demand is still out, and all the other things that drive property up in the long term still exist as well. This is a blip. How big of a blip? We don't know. But if you're in property investment for the long term, all will be forgiven. Every market correction, every market crash has been forgiven in the past. Now, if you are worried about voids and completing on a property and then not being able to let it, well, there is a bit of good news right now. The actual process of buying a property is hard to do. A lot of solicitors are not working, and if they are still working, then they're at a reduced capacity. And let's face it, solicitors seem like they're at reduced capacity when they've got normal market conditions. So things will go slower. Getting your property complete and over the line may take a bit longer than anticipated. And that means that could be longer into us having a solution around this crisis. Now, of course, you could be a little slow yourself to reply to some of the inquiries and get whatever needs to be done, signing contracts. You've got to be careful that you don't slow it down so much that you kill the deal and then you're, scuppered. But if you can slow things down just even slightly, that's going to go in your favour. And another thing to consider is that it could potentially be a lettings boom once this is all said and done. Because there's lots of people right now that are thinking about their lives and going, what do I want to do next? Where do I want to live? And then there's a bank of people who were going to probably move in these months who currently can't and will all want to let property as soon as this is over. So for a short period of time, there could be a lettings boom with lots of people moving around. And that's great for those people who have properties void at that point. So it's not all doom and gloom.
Okay, so let's come to our last scenario now. So this is when you are right back at the beginning of the process. So you might have identified a property that you like the look of, or you might not even have got that far. You're still doing your research. You'd been planning to invest in the next few months. You might have set a goal of making it happen by a certain date, but you haven't had an offer accepted, you haven't exchanged, you haven't completed. There's a whole spectrum of options here, Rob, from completely chuck the whole idea out and never think about investing in property ever again, to just carrying on as if nothing had happened and doing what you would have done anyway if the world were normal. So both those extremes to me seem extreme. But what do you think are the reasonable limits? Where should or could people be falling on that spectrum?
I completely agree, Rob. Both extremes of the spectrum are probably not a good approach right now. So let's say you're on the side of, I don't want to ever do anything ever again in property and I'm out. The chances are you feeling like that are quite slim because you're listening to this podcast. But let's just say you're not far off from that. You could feel very negative about property right now. And that's understandable. The world is filling you with negativity if you read and consume and watch the media. But actually, even if you don't feel bold enough to invest right now, there are opportunities for you. And I think whenever you're presented with a challenge, look at it and go, what can I take from this? What are the opportunities? And the opportunities now are here for people who are feeling cautious, because you can still come out of this crisis stronger. If you are a new investor, you should be doubling down on your research right now. You've got hopefully a bit more time on your hands. It feels like it for most people anyway. So read the books. Rob's written multiple bestsellers. Go on all the free courses we've put on the Property Hub website. Take advantage of YouTube. We've put plenty on there as well. You've got a load of podcasts you can go through as well. There's loads and loads of free information, and not just from ourselves, from lots of other people. So go and check that out. Go and better your knowledge. Go and come out of this crisis as a stronger investor, a more knowledgeable investor. Now, if you're an investor already, then make sure you're sharper. Follow the market. Make sure you've clued up of what's happening. Pay very close attention to price movements if there are any. Look at what's coming onto the market. If anything's coming on right now, then that's probably somebody who needs to sell. Nobody is selling at the moment who wants to. People who are selling right now are people who need to. So there are better deals to be done. Now, you may not have the confidence to go straight in right now, and that's, as I said, understandable. But at some point in the future, you may have the confidence. And if that deal hasn't been snapped up yet, then once you are feeling a bit more positive about everything, then you can attack and go and build your portfolio. So at the very least, you should either come out of this as a more knowledgeable investor, or you should come out of this as someone who's an experienced investor and knows exactly where their market's at when things calm down. Now, of course, that's one end of the spectrum, but going to the other end of the spectrum, which is just blindly carrying on and investing in anything that comes up, like you would have done before, is also not advisable.
Yeah, things have changed, and to blindly carry on as if it hadn't would be a crazy thing to do. But again, this is where your actions come down to your opinions of how things are going to pan out. And we talked about this on the podcast a couple of weeks ago. We talked about the various different ways in which this could pan out for the property market over the coming years. We don't know yet, and we won't know for a while, which of those is going to actually come true, because the property market, to all intents and purposes, has been frozen. When it's unfrozen, what happens next? We don't know, and data lags anyway, so it'll be a while. But your actions now depend on your beliefs around which you think is the most likely. So if you think this is going to be really, really bad, property prices are going to drop significantly, and it's going to take a long time for them to come back again, then you would be completely shelving any investment plans you've got. Less so if you've got a bias for income, because like I said earlier, you're going to be more focused on the money that's coming in than the actual capital value of the property. But in any case, obviously, if you think prices are going down a long way and they're not coming back, you're not going to be investing. But if you think it's not going to be as bad, so one of the two other options that we talked about in that podcast that we did previously, not necessarily that the world is going to snap back in this really neat, quick V shape, but prices aren't going to take much of a hit and the market will ultimately come back and kick on in a reasonable space of time, then you could actually be really excited about investing at the moment, because there will be deals out there that you can do right now that you couldn't do 2 months ago, and you might not be able to do in another few months.
Yeah, absolutely. I talked about this on one of our market update podcasts recently about a deal in Nottingham that we've been working on for months. We started miles apart at the beginning, as often happens in a negotiation. But as we got closer and closer to doing a deal done, we came to a bit of a stalemate. And we were a significant sum still away from doing a deal. And this was about a month ago. And months of work had basically paused, and we walked away from it because we didn't get the deal we wanted and they didn't get the deal they wanted. They couldn't entertain the level of discount that we were pushing for. And it's 10 houses, and it was about the equivalent of £10,000 a house, which, you know, is a lot of money. It's £100,000 to the developer on top of the discount we'd already asked for. Now, along comes the coronavirus and the crisis around it, and people get nervous. And conversations opened up with lots of developers, including this one. And we've been able now, verbally at least, to agree that deal. And that deal simply wasn't doable a month ago. But because of this crisis, it's created an opportunity. You know, the developer has taken off another £100,000. But they are now going to get their deal. They are going to make some sales. They are nervous. We are confident in the long-term fundamentals of property. So we have done a better deal. So yes, if you negotiate well, you can absolutely be excited by the opportunities right now.
So I talked about where I stood on what I thought was most likely to play out in the future back in episode 367. So if you haven't listened to that one, I think that's well worth going back and having a listen to, because that might help to frame your own views on what you think the future might look like. I've been careful to say most likely and also say that I could well be wrong, because we don't know. Nobody knows. And the actions that you take need to be based on your beliefs about the future. Personally, based on the beliefs and the things that I think are most likely that we discussed back in that episode, would I be pulling out of a deal that I'd exchanged on at this point? No, absolutely not. Would I be buying something at full price at the moment? No, absolutely not. But I would definitely go out and do a really good deal that I couldn't have done a month ago, and that will still be a good deal in the range of outcomes that I think are most likely in the future. So that's where I stand. I would be investing, but I'd be really digging through to find really strong deals that are going to perform in that segment of outcomes that are believed to be most likely in the future. And if I'm a bit too optimistic about the future, well, that's okay, because my strategy allows for a margin for error, because I am looking over a long time period here. So that's where I stand. And Rob, we've been podcasting together for long enough now that I don't expect your view to differ wildly from that.
So in the short term, personally, I'm probably going to look at some stocks. They're really cheap. While property hasn't crashed, stocks have. There's some really interesting opportunities out there. I'm not going to do it in a big way. That's not my expertise. It's not what I'm looking to do. But there does seem to be value there. I'm no expert, but the property stocks in particular look very interesting to me. In the short to medium term, I'm going to push on and do as many great deals as possible. This is an unexpected window that we've been presented with, and we want to take advantage of it. So we will do our very best, and hopefully our investors benefit from that too. It's a really exciting time to be doing deals because so many people are asleep right now, but we're not. And then for the business, we don't talk about the business as much, but in the background, Rob and I are working on some really, really exciting projects that some people would question us doing right now, considering the market conditions. But actually, our long-term view of the economy and the property market hasn't changed. And you know what? You may notice a pattern if you've listened to the podcast for a long time. Often, when the market is buoyant and bouncing along, we've been a little bit more cautious in our advice. And the more difficult it seems to operate as a property investor, we are the most positive. Because it's actually when times are like this that you have the most opportunities to act. Because there is more fear, there is more opportunity, there is less competition, there's so much in your favour. What you have to do is get over your emotion. But fortunately for Rob and I, we've been investing for a long time now. We've been in business for a long time now. So we've seen good times and not so good times. And we've taken those lessons, and that's helping us make better decisions today.
So before we wrap for the day, we always make time for Hub Extra, that bit of the show where we give you that little tool, tip, resource, quote, app, whatever it is, something that is going to enrich your life in property and beyond. This week, Rob, we're sharing what I guess you might call a technique or an exercise that's always worth doing, but even more at the moment.
Our resource this week is an inputs audit. What are you taking in as information? Have an audit of that. Because right now, there's a lot of information in the world. And unfortunately, a lot of it is negative. And also, unfortunately, a lot of it is not that useful or helpful to you. There's also a lot of misinformation and scaremongering. So you've got to be very careful about what you consume right now. But we don't always stop to think that we should do that. So many of us have found the BBC News feed that gives you almost minute-by-minute update of what's happening in the world of the coronavirus. And it is a doom and gloom news feed. Yes, it is fact. And yes, there is lots happening that we probably need to be aware of. But do you need to know it all? Do you need to be constantly going back to the BBC News website or constantly have the news channel on to find out what's happening? Or, as an alternative, can you just watch the news in the evening for the first 10 minutes? Hear out the most important things, and then that's your daily consumption. And if there's anything else that's really important that's going to happen, well, chances are that your friends and family are going to tell you about it as well. So be careful of the amount of news that you're taking in right now, and also the type of news. And this relates very much to social media. There's a lot being thrown around out there, a lot of strong opinions, and a lot of people will take tweets and pass them on as fact. You've got to be very careful of what you take in. Myself personally, I'm avoiding Twitter. I don't think it's a good place right now. There's a lot of negativity on there. Of course, there's some positivity, but the balance isn't right. Instagram seems a bit more positive. So if you need a social media fix, possibly consider that. But just be careful. Don't just take a tweet as a fact. Don't take a headline as a fact. Be very careful of what you consume. And also be careful of what you hear from friends and family. Just because they're friends and family doesn't make them experts in this field. Although a lot of people right now are sharing clips, tweets, headlines like they are experts. And they haven't actually researched what they're sending out. So if you are being sent stuff and you do end up reading a headline, please research beyond it. If you feel a bit disconcerted by what you've read, is it actually true? And then try and cut down on what you are reading and where you're getting your information from.
It's really interesting you say that, because I did the same thing for the first couple of weeks of this all kicking off. And for years now, I've paid very little attention to the news. I've taken the view that if it's important enough, it'll probably come to me in the end, and that's turned out to be the case. But for the first couple of weeks, I was sitting on that live news feed and I was reading everything I could find around it. And the negative effect was so much worse than I thought it would be. It affected my mood a lot. It even affected my sleep, and I never have trouble sleeping. I was literally waking up in the night and having all these thoughts swirling around in my head and couldn't get back to sleep again. And it kind of made me think, my God, this is what it must be like for the people who are paying attention to the news all the time. I knew it was damaging, but those last couple of weeks, and I've stopped again now, gave me a real insight into just how harmful it really can be.
So look at your social media inputs. Look at who you're getting information from, including your friends and family. Don't just accept a headline as fact. And possibly spend 5-10 minutes today just stopping, pausing and reflecting on where am I getting my information from. Do that input audit and you will have a better week.
Yeah, staying away altogether is probably not a bad strategy, but if you do interact on social media or have things forwarded onto you, then you've got to do your own fact checking on this stuff. We've seen countless times on the podcast when we're doing our news story how the headline doesn't necessarily match up to the content of the story. So if you read on, that headline turns out to be an exaggeration at best. And that's making the assumption that the headline and the story are in any way true or unbiased. And most things can be debunked quite quickly. I think it is really important when it comes to your inputs to be taking in a variety of inputs of different opinions. It's very easy in social and even in the broadcast media to get yourself into an echo chamber where all you're seeing is content that reinforces your own views. And having your own views reinforced feels good. So it's hard to go out of your way and find views that challenge your own. But it's really important to do. And it's something that I've actually stepped up over the last few weeks. I've been seeking out people and sources who have a very different view from mine because I believe there could be something to learn there. It's highly unlikely that I'm 100% right. So the more different views I can take in, the closer to right I'm ultimately likely to get to. It's very tempting to unquestioningly accept everything that seems to be in line with your views and to go out of your way to debunk and pick holes in things that go against them. But like you said, Rob, I think you've got to be equally skeptical of everything, really. So that's us done for the Property Podcast this week. Lots to think about from this week's episode, and we'd love to hear your views. So find us on Facebook, Twitter and Instagram at Property Hub UK. And don't forget, we will be back again with our Market Update podcast tomorrow. That's Friday, before we do it all again next week. So until then, thank you for listening. Have whatever fun you can, and we'll see you soon. Bye-bye.